understanding how to calculate mortgage payments is crucial for homeowners to manage their finances effectively and plan for homeownership expenses. Here is a 6-step guide to help homeowners understand their mortgage payments. 1. Gather loan information. Collect all relevant information about the mortgage loan, including the principal amount, interest rate, loan term, and any additional fees. 2. Identify loan term and interest rate. Determine the loan term, expressed in years, and the annual interest rate specified in the loan agreement. 3. Use mortgage payment formula. Apply the standard mortgage payment formula, which calculates the periodic payment amount based on the loan amount, interest rate, and loan term. 4. Calculate monthly payment. Use a mortgage payment calculator or manually calculate the monthly payment amount using the formula derived in the previous step. 5. Consider escrow accounts. Account for escrow payments for property taxes and homeowners insurance, which may be included in the monthly mortgage payment. 6. Review amortization schedule. Review the loan's amortization schedule to understand how each payment is allocated between principal and interest over the loan term. Conclusion: by following this 6-step guide, homeowners can gain a better understanding of their mortgage payments, allowing them to budget effectively and manage their homeownership expenses with confidence. I hope that you liked the video and do follow our channel for more professional and business tips and other interesting videos. Thank you and goodbye.